Hey everyone, Mark Haley with the Home Run team here again with some more great news. And for whatever reason, I haven't heard very many people talking about this one, but it's going to save most Texas homeowners over $1,200 per year. And I thought you might like to know a little bit about how that's happening. So there's a $12.7 billion package of property tax cuts that's going to go before voters later this year. It promises to deliver savings to millions of property owners in Texas that have been suffering from skyrocketing tax bills. Our governor signed the legislation, it created the cuts, but before they go into effect, Texas voters will first have to decide in a constitutional election on November 7th whether or not to allow the state to spend those billions of dollars in our money, mostly collected from us during the past 2 years, to pay for those massive cuts. But if they're approved, an outcome that seems likely, it's almost certain given the support the tax cuts have gotten in the past, these changes will be applied to the 2023 tax bills that are due in January. Here's what you need to know.
What are we voting on?
Earlier this year, during the second special session, lawmakers passed 3 bills to spend $13.3 billion of a historic state surplus to rein in Texas property taxes, among the highest in the nation. The extra cash in the state coffers was attributed largely to record sales tax collections.
And inflation was going crazy over the last few years.
Add that $13.3 billion to the $5.3 billion that they budgeted in 2019 to lower school tax rates. That's a total of $18.6 billion in tax cuts that are going to go into effect for property owners this year. Senate Bill 2, at a cost of $12.7 billion, details the proposed property tax cuts, while Senate Bill 3, which adds about $600 million, adds cuts to the franchise tax that some businesses have to pay. These measures will not technically appear on the ballot. However, House Joint Resolution 2 is the constitutional amendment that will go before voters in November and would authorize the state to enact the cuts in those 2 bills. What's the plan? There are 5 key parts of the tax cut package, but for the sake of brevity and keeping this focused on residential real estate, which is what I focus on, we're just going to look at 2 parts of the tax cuts package. Those affect the Texas homeowners of this great state the most. 1, school tax compression. About $7.1 billion will be sent to Texas school districts so that they can lower the tax rates that they levy on property owners. The move is known as compression, and it would reduce school districts' maintenance and operations property tax rate by 10.7 cents per $100 of a property's valuation. Stay with me. The M&O tax, as it's known, helps pay for public education costs like teacher salaries, school building maintenance, and makes it the largest chunk of property owners' tax bill.
Now the really fun part.
A $100,000 homestead exemption. An estimated $5.6 billion would be used to more than double the current $40,000 property tax exemption available to all Texans who own the home that serves as primary residence. A homestead exemption is the amount a homeowner can take off the value of the house that they live in before it's taxed. For example, the owner of a $350,000 home is currently being taxed at $310,000. The same house would be taxed on only $250,000 under the newly increased homestead exemption that was approved earlier this year that we have to vote on. If approved, how do I get my cuts? Well, if the changes in the tax code that require the voter approval get the green light, and I'm sure they will, they would mostly go into effect automatically with no action required by property owners. The exception being that if you're a homeowner in Texas who has not already filed their homestead exemption, what are you doing? You need to do that. Typically, if you've forgotten to do it or you're just learning about this now, from me, good news. That exemption can be applied retroactively up to 2 years. So once you've applied for it, you don't need to keep applying every year. It stands as long as the homeowner lives in that house. How would the changes affect homeowners under 65 years old? Approximately 5.7 million households in Texas are considered homesteads. Policy analysts and lawmakers project the expanded homestead exemption and lower school tax rate would reduce a Texas homeowner's property taxes by an average of 41.5%, or about $1,300 a year on a $350,000 home. Let's take a look at a few examples. The value of a homeowner's property was $650,000 last year. Under the current homestead exemption, they paid taxes on $610,000 of that property's value. This year, The home property assessment was capped at the worst case scenario of $715,000. Under the proposed $100,000 exemption, that homeowner would pay taxes on $615,000 of their property's value instead of paying taxes on $691,000 under the current exemption. Based on the current rates, they'd likely save more than $100 a month on their tax bill. Another example, there's an owner of a home that's valued at $315,000 this year, would get a savings of about $80 a month. The owner of a $1 million home would save about $150 a month. So how would those changes affect senior homeowners and those with disabilities? In addition to the new $100,000 exemption, Texas homesteaders with disabilities and those that are 65 and older will continue to qualify for the extra $10,000 exemption they're already allowed to receive, for a total exemption of $110,000. These groups of homeowners would also see their school taxes decrease. The school tax rate reduction and the $110,000 homestead exemption are expected to lower property taxes for seniors and disabled homeowners by about $1,450 a year on a $330,000 home. And finally, how would these changes affect residential renters? I don't have great news.
I'm sorry.
People who pay rent to a landlord for their home are not guaranteed any tax cuts whatsoever for the new property tax package unless their rent is somehow tied to the tax rates, which is really, really rare in residential leases. The proposed law does not require landlords to pass along any of that savings from property taxes to the tenant. Supporters of the tax cut package say that the tax savings on some rental properties would allow landlords to avoid increasing rents at the pace they've been rising at in recent years. And the market resulting from lower appraisals would maybe help drive down prices through competition. Overall, the effect this bill will have on renters remains to be seen. Just because the landlord is getting a tax break doesn't mean they're going to give any of that to you as a renter. They're under no obligation to do so. So to be on the safe side, give us a call, send me a text, type up an email, send it to me, ask me some questions. Let's see if we can get you into a home so that you don't have to worry about seeing those savings from a landlord. Guarantee it by becoming your own landlord. All right? Thanks for sticking around with me on this one. I know it's a bit longer than usual, but I felt like, saving $100 a month might be something you want to know about. So please don't hesitate to reach out if you've got any questions about this or anything real estate related at all. Love you guys. Take care.